Liquidations aren't just bad luck. They're engineered. Every time the market dumps, someone profits. But not randomly, with a plan. In this episode, we'll expose how smart traders use liquidation maps to trap retail, hunt stop losses, and flip pain into profit. Over $450 million in long positions were liquidated during the latest Bitcoin flush. BTC dropped sharply from the 106.5 zone into 103, a 4% move, devastating for over-leveraged longs. But for those prepared, it was a setup, not a surprise. Let's break down how smart money plays these traps. Welcome to the very first episode of Smart Trading Tools, a series where we don't chase the noise, but instead decode the invisible mechanics that actually move crypto markets. Retail traders get bullish at the top and overexposed in leverage. Why? Because breakout bias is emotional. As BTC approaches resistance, longs stack up and funding turns positive. That's when smart money starts watching. They don't look for confirmation, they look for vulnerability, because in crypto, liquidation levels are visible, and visibility is risk. Smart traders use maps, not guesses. With tools like CoinGlass and Hyblock, they see where liquidations will likely trigger. They look for stop-loss clusters, high leverage pockets, dense liquidation zones. Price is drawn toward these areas because triggering them releases liquidity, and liquidity fuels opportunity. It starts with consolidation. Price stalls just below resistance. Retail enters, expecting breakout. Then comes the bait, a sudden move above resistance. FOMO entries flood in. Late longs stack up. And then reversal. Price snaps back. Longs are trapped. Liquidations cascade. Smart traders don't chase. They absorb. On June 20th, Bitcoin dropped nearly 4% from above 106 to 103. Liquidation data showed dense long clusters just below 107. Once price breached that zone, over $450 million in longs were wiped out. But as the market panicked, smart money entered. Volume surged. Open interest dropped, and price formed a base. This wasn't a dump. It was a liquidity raid. Smart traders watch for CoinGlass heat maps, high block stop zones, shifts in funding, open interest drop, price action near key levels. They don't react. They anticipate. Best entries happen in the pain, not before. Look for sudden liquidation spikes, negative funding flips, OI crash, support confluence, divergence on high time frame. Enter small, scale and manage risk. Let price confirm. No guessing needed. Use the CoinGlass for liquidation zones, Hyblock to map stops, Trading Light for order flow, Arkham and Look and Chain for whale tracking, Bybit OI for leverage tracking. When signals align, act. Pain in crypto isn't chaos, it's signal. Smart traders don't follow price. They follow pressure. They prepare before the move. This is Liquidation Strategy Unlocked. Subscribe for more and decode the market before it reacts. So what's the takeaway? In this episode of Smart Trading Tools, we didn't predict the market. We learned how to read what the market is structurally incentivized to do. Liquidation maps don't show the future, but they show us where tension lives, where the crowd is exposed. And that's the kind of information smart traders watch, while others look away. In the next episode, we'll break down another insider tool. If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research.